US crude retracing till $74 levels, critical resistance at 73.874. It has seen a good reversal and closed the week just a notch above $70 levels. Now, what to expect next week? Can we expect it to continue with the downward move from here, or is it again going to reverse and trade bullish? Which position you should take in order to profit crude oil, trading crude oil next week? We will see with the help of charts and indicators. Towards the end, I will give you the trading levels and strategy. Do watch till the end. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon, which keeps you updated with the twice a day analysis which I share for crude oil. Also, you can join my free Telegram channel where you get the live market updates. The link is mentioned in the channel and video description. Let's start. Let's first look at the move what we had seen last week. See, there was a reversal sign. It is retraced, and yet again achieving lower highs, it is again tried to reverse. Now, most interestingly, it has closed the week at bottom at just close to $70 levels. And most interestingly, this is coming after a reversal sign on the daily charts. Retracement is done, again trying to look downwards, and hence once again you should look forward to $69 level. See, once if it trades below 69.7, you can trade, you can sell here and expect 69, 68 levels, and in fact it can trade below 68 also. Hence, next week if you see oil trading below 69.7, you can take a sell entry. However, one has to be watchful of 68 first target, and if it trades below 68, there could be further drop. However, remember 65-66 zone is a very good support for crude oil here. Now if you track the movement here, see the highs there, the drop, retracement, drop, retracement, drop, retracement, drop. So this is the fourth cycle in, and this is, you can see this is expanding in nature, expanding in the sense this is increasing bearishness and the triangle is widening here. So possibly we see closing at bottom is a slight indication that we may see a little gap down opening on the coming next week or on the first trading session, that is Monday. Now at the same time, if it opens with a gap and trades above 71 levels, you can buy again, wait for it to break past 72. Now see, 72, 73 levels are going to be a good resistance, and beyond that we may see it flying high. Now why it is possible? See, higher highs, higher lows. Now this is still very much within the retracement zone, and if it continues its upward journey, we can again see 74 and 76 levels here, and hence you have to be still watchful and cautious till 69-70 zone is respected on the downside. Now this is on the daily charts. Look at the weekly charts now. On the weekly chart, this is the fourth straight red week, and you can see achieving the top at 83.5. We have seen a good drop in oil, and if you look at this, if you connect this top and if you connect the lines here, you will find this is still right now in an expanding triangle. However, see, this time the lows are not at a steep, and you can see that bearishness is certainly diminished, and it may not try to fall below these lows at 64 for recent time frames, on recent time frames. So 64 certainly is going to be the level which one should look forward to. If it breaks, then it should be definitely a crash which is going to be cooking, and then we can see 60 and below level. So now also on the weekly charts, fourth straight red candle. Now see the candle size here. The candle is with a bigger tail, a smaller red body, and from here there could be a possibility of asymmetry. So if it opens flat, trades above 71, possibility exists that it may again try to fly for 74 levels, forming the top, again closing here. Then this could be a reversal sign for oil, where in coming few weeks we may see a rise in oil prices again. So now this 69.70 zone, rather I will say 69.71 zone, is something which is going to remain a very crucial zone for oil. Whichever direction it takes, these levels are certainly going to remain a prominent decisive factor for now. Now let's have a look at the monthly. Now on the monthly chart, the candle is red. You can see a flat top there. It has opened on a bearish note, and it has consistently traded bearish here. Now it is not in mood to break past 76 here, because beyond that it is going to fly high, and this time it may try to breach past 85 also. So what it may try to do, see if you connect these two here, if you connect this to here, higher highs, lower lows, both are done. A bigger range, a wider range can be expected if it continues its journey above 76. And that is why this week is gonna be crucial. Trading above 71, we may see 74 and then 76. If these two levels are taken, certainly one can remain long further for 79 and 80, and then 83, 85 levels also can be expected here. There could be an extreme reversal for this. Right now it is bearish for now. It is not indicating any reversal sign. And let's have a look with the help of indicators. If the indicators are also speaking the same language, we'll try to find out if the reversal indications are there on indicators or not. Now on the monthly charts, you can find out it traded at the second half or the bottom half of the Bollinger Bands. That is the first part. Second, the moving averages have started to converge here right now. Both are trading with wide apart, indicating bullishness. However, you can see the slope has started to decline, which is a bearish sign. Also, right now it is trading below the 20 months, 50 months, and almost close to 100 months average, which is also a bearish sign for now. This is exponential moving average. The simple moving average, 100 months average, it is situated at $60 levels. Now see the monthly stochastic, after dropping till oversold zone, it has retraced, and there could be a further possibility of a fall from here. Right now it is still trying to reverse. Now see the MACD. At this point in the year beginning, we had predicted that this could be going to remain a bearish year, and see that is what has happened. But at the same time, has it achieved the bottom? You can see this on the monthly chart, the rise, the retracement, the rise, the retracement, and the candle size flattening here, indicating that possibly this month could be the month where it can try to achieve the bottom, and from here the next round of rise can be expected in crude. You can see this beautifully connected MACD on the monthly charts. Also the candle size have also peaked out here, and hence it might try to restrict itself within the zone for 76 and 64 for the month of May. Possibility exists that it can try to fly past, because see, it has achieved the bottom, and if it reverses from here, that is something I will be looking forward to. RSI looking down, trying to trade bearish. Now look at the weekly chart. Now on the weekly charts, right now oil is trading bearish. See the 20 and 50 period, 100 period crossover has happened. The 20 and 50 period crossover has happened. This is almost not a good sign for the crude prices. At the same time, right now the 50 and 100 period crossover is waiting to happen. So yes, till 80-85 levels we have to be watchful. If you look at now, see the simple moving averages have also started to cross over. This is the 20 and 100 period crossover. Stochastic on the weekly charts have dropped significantly, has come back to comfortable levels. But look at MACD on the weekly charts. This is the third, 1, 2, 3, 4. This is the fourth or fifth time crossover for a sell entry, and this is happening at a quite a lower levels. Now see the peak it is seen as plus 100, and the minus 500 levels it is seen. Now possibility of a retracement was there, but right now it is trying to converge crossover, though it is still in green. However, it has not yet crossed over for a sell. The next weekly candle will decide which direction it wants to take. RSI looking down. For now it is trying to trade with modest bearishness. Now look at the daily charts. On the daily charts, clearly bearish momentum. All the three moving averages trading with divergence. 20, 50, 100 period moving averages have crossed over, and this is a bearish sign for crude. The super trend is also on sell till it's below 76. So for the next week is going to be decisive for crude oil. Also it is trading at the bottom of the Bollinger Bands. Stochastic falling vertical, it is looking downwards right now, indicating bearishness. The MACD on the daily charts is still bearish. It is at bottom here. You can see this, and it is still very much in the channel. Let's see what it does at minus 200 levels. RSI trying to look downwards and trying to give you slight bearish indication. Now we have seen the charts, you have seen the indicators on multiple time frames. Time for me to define the trading levels and strategy so that you can trade profitably. But before we proceed, yes, if you want to learn this art of trading profitably, you should join my 22nd mentorship batch, which starts on first week of June. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals channel, trading as per the signals. Definitely, you can benefit. Now, where to buy? I will recommend you to buy any point of time. If you see it trading above 70.5 levels, you can buy here. Expect 71.2. Now, see, these levels are going to remain important: 71.2, 71.8. If it breaks past this, you can expect we can see this hitting 73.5, 75 and 76 levels. Now this is the next zone which I'll be looking forward to. If it breaks past 76, more bullishness may directly take it till towards 78, 79.2 and then 80 levels. Above that, anything is a bonus and it is going to fly high. Chances are less, but these are markets. Anything is everything is possible. The more it moves away from this levels and the more it moves away from these levels, certainly this should be more bullishness. More bulls will try to be lured and more positions will be created as soon as it starts moving, and then slowly it will gain momentum. So this is first part. But where to sell? Now I will recommend you to sell here at 69.7. Expect 69.2. Now, once it drops below 69.2, there could be further bearishness, which is going to take it for 68.6, 68 levels, the next important support. And if it drops below 68, it is the more bearish are going to get through. You can expect 67.1, 66 and then 65 levels. Now this is the most important zone which is going to provide a very strong support for crude oil if it continues its downward journey. Chances are less that it is going to go till there, but yes, these are markets, anything and everything is possible, and hence you have to strictly keep closing the trades, keep re-entering, and yes, do watch the daily analysis which will give you a better idea, better picture of what to expect and at what levels you should take the trade. Take your positions accordingly. Trade with a stop loss. Trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.